Well, all what has been said here, I think that we have the same view for that, no big news there. But something what has not mentioned yet is that we obviously see that there's a movement from the pension money to the private wealth. It's not happening over the night, but it's clearly happening more and more that because of the DB/DC schemes are changing. So there's something in the 10 years horizon that what is changing, already changing. We see the private banks raising more and more money. They are more and more interested to pool the money and allocate that into the property, like with the traditional asset managers, property fund managers, and so forth. So I think that's something I can add here, so that that's something like a long-term trend. I mean, DB is of course not disappearing very soon, but there's more and more private wealth money coming into the pool funds and replacing institutional money, and that's global trend.
Is that being driven because of instability in the equity markets and also low bonds, or what's driving that trend?
Well, I mean, that's a long-term trend that we have. People are living longer. People are, older people are much more wealthier, and there's so much more private wealth. I understood that from one study that in the US only there's a $5 trillion USD private wealth already at the moment. So it's a massive new source for our type of traditional institutional investors. It's just something that we need to learn what type of product offering we should have for those investors. Will that money be patient as the pension money traditionally is? So we will see that, but I would guess that there will be more demand for the closed-end funds, but also some of the money is, like you said, is kind of replacing, or is the traditional bond money, but it's coming into the property because of the negative or low yields. So there are a number of reasons on our review.
Okay.
I was saying actually there's something in the Far East as well, as a sort of middle class develops and emergence of wealth managers to manage that. But money used to just go through the family, but there seems to be an ongoing class. And obviously there are people out there established like Core Capital, but there's other new established fund managers who, like Temple, have just done, I think, or at least in Singapore, but they've just done a so-called macro real estate trends fund. And we sometimes find that on a Chinese-related deal, where the money comes in from China, there are two different conduit sources. There's the institutional money that's coming in through an interposed Hong Kong vehicle, and then there's a private set of money that normally comes in through a Cayman vehicle, and the two co-invest. So it's quite a deep market.
Okay, let's deal with South America. We're just concluding a mandate there for build-to-sell housing, as the Americans would call it. And a lot of the capital has come from South American pension funds. So they tend to be, from that example, they tend to be investing at home. We haven't seen a lot of that capital. We're tracking it because we can see it. They're putting some fairly big tickets in, $50 to $100 million into some of these vehicles. So we can see it, and we're waiting for it to go somewhere else in the world, but it hasn't done yet. Otherwise, I guess from our business, we need to access the private wealth for our clients, and so we've been looking closely at Middle Eastern private wealth, particularly Saudi private wealth, which tends to be quite nervous at the moment about investing at home, and is finding ways to invest elsewhere in the world. So we've got an arrangement with a private bank there to access that, because the regulations demand that we have to. Elsewhere in the world, I think, well, going to your oil price question, definitely the Middle East, the very biggest sovereigns are still investing heavily and strongly because they're getting so much capital back from investments they made 10 years ago. So that's what's funding it. It's not necessarily new oil money, it's just some of the returns they're getting from end of funds or selling out of assets. The layer below that is definitely quieter, and that goes for any jurisdiction in the Middle East. Still there are also new entrants in the Middle East, new sovereigns, as you might call it. And we're seeing, again, we're tracking those investments. There are investments they're trying to make, because obviously they can be, again, pretty big tickets when they happen. I think any oil is in dollars, and therefore there's a kind of a balance between less revenue from your oil, but also your dollar goes further around the world. So there's a bit more, a bit of balance going on there, which is helping them stay in the market.
But I wouldn't underestimate the backlash against a Trump presidency that would come from foreign investors in the U.S. I think they'd be pulling out the money. I think your phone would start ringing immediately, and they'd say, "Listen, get us out of there. We want to go somewhere." And then we have the problem of where you go exactly too. And then equally, you've got in Asia, if I understand it correctly, the general sentiment is that the markets are still pretty pricey and the yields are still pretty low. And so I just see a long continuum of capital flows continuing to come on as each new class of the new wealth generates itself and looks outwards, as it were.